Hello guys, welcome back to the channel, the Daily Forex. In today's video, I'm going to show you guys a very powerful strategy that you can use to trade boom and crash indices successfully. Alright, so let's get on with it. Now, first and foremost, you can currently see that we have about 3 indicators on the chart, the RSI and 2 moving averages. Alright, so let's go on with the parameters for this strategy. We'll go over to the indicator section. On the main window, you click on moving average. You set the period to 14. Shift is going to be 0. Method exponential, then you apply to close. The style, you put out on 2 pixels, then use black color or any color of your choice, as long as you understand what you are doing on the market. Then you click on done. Alright. Then the next indicator, you want to use the relative strength index on indicator window 1. Period 1, apply to close. The levels, you set 10, 90, and 50. For 10, you put on buy. For 90, you put on sell. And for 50, you put the V zone. Okay? Put a V zone. Alright. Now, you set the style to color black on 1 pixel with this middle line. Then you click on done. Alright. Then the style right here, you set that to 1 pixel with the color of your screen, or the color of your background. If you're using dark background or white, you set the color to that. Then you set this first trend line. Then you click on done. Then lastly, we're going to put the moving average on the indicator window 1, period 50. Shift is going to be 0. Method exponential, apply to close. The style, you put that on 2 pixels with color red with this first trend line. Then you click on done. Perfect. Alright, now as you can see, these are the parameters, the setup, and the indicators for the strategy. Okay, now let's get on with it. Now currently we have level 90, 50, and 10 on our chart right now with a V zone. Now remember that this V zone is also important on this chart. It's going to show you a possible reversal for a buy, for you to expect a buy market. Okay, so let me explain to you guys. Now you can see, when you're in this type of market, you observe and you wait until price, which is the moving average, gets to this level of 90 at this very point. When it crosses above this very point, that's when you look for your sell, as you can see. But you don't just enter into that sell. You also check your confirmation when price drop below this moving average, as you can see at this very point in time. The moving average here, you can see the black moving average at this very point. When price crosses below it, you enter immediately from these other candles. Remember, we're doing this on the 5-minute time frame. So at this point, when price drop below, you enter into the market for a sell. As you can see, from this point in time down to this point at this very moment, a very long amount of sell. As you can see, from down here to this point is a good amount of profit. Okay, and also you consider the amount of lot you are using. So using smaller lots or big lots, we signify your profit and your loss. Okay, so the higher the loss, more profit, and high losses, the lower the loss, small profits, low losses. Okay, so as you can see at that point, as you can see right there, so from this point at the very moment, level 90, you go in after price have dropped, which is spiked below the moving average on main window. You go in for your sell at that point in time. So you only go in for perfect entries, and I'm doing this on the third zoom level. So this is how you're going to know when is the third zoom. All right, so you zoom out completely, then you zoom in twice. Okay, so the way I do my own zoom, I count this first zoom here, which is at, I count it as the first zoom, then I zoom in twice. After you zoom out, you zoom in twice. That's how I count my own zoom. So this is going to be zoom 1, 2, and 3. So this is the third zoom level that I use. All right, as you can see. Now at this moment again, the moving average, which is this red line, crosses above. You can see it's above this line, level of 90. At this very point signifies you overbought zone. Price dropped. You can see it spiked below this moving average. You enter for the second sell. As you can see from here, a very long sell opportunity. Now you only do this with a good amount of account. Okay, so you know that this is a 5-minute time frame, and you know how crash market works. So when market dropped, you would start to buy for a certain amount of time. Okay, and when the market is going to be buying, you're going to be in a certain amount of losses for a particular amount of time, but you already know where price is going eventually. Okay, now a lot of traders, they make this mistake by exiting too quickly. Now, I'm not judging you guys if you are a beginner trader. Okay, so if you have a certain amount of account, like a small account, and you know that okay, your account is not going to carry this strategy, if your account is not going to hold on to the market stability, do not enter into that trade with when you see okay that the market is buying for a certain amount of time, and you know that your the setup is correct, but your account can't hold it. So what you should do is just go in short-term sell. Once you sell, let's say the market have bought after 5 to 10 candlesticks, then you exit, because just to protect your capital so that you don't end up in more losses. So you only go in for perfect entries. Okay, now you can use the strategy to grow a small account, but only follow what I say. I said, if you have a really, really small account and you want to grow it with this type of strategy, only risk about 10 to 15 candlesticks. 10 to 15 candlesticks if you are trying to catch the spikes. Remember, this is the 5-minute time frame. So what you do is to go over to the 1-minute time frame. So once you place your entry, let's say you observe right now at this very point, price have dropped here. This candle, as you can see, when price dropped, the market bought. If you zoom in, let's zoom in, guys. Let's see. As you can see here, once the straight candle dropped below this moving average, you can see that the market started to reverse upward. It reversed upward down to this point before it eventually dropped again. As you can see, it dropped. It dropped. Now from this reversal, you can see this is the 5-minute time frame, and you know that this should be almost about 10 candlesticks, because this is the 5-minute time frame. So if you go over to the 1-minute time frame to calculate it, it should be up to 5, 10 candlesticks already. Okay, so you want to understand this before placing your sell, trying to catch those spikes, because you are doing this on the 5-minute time frame. So these are what you need to consider. Do more of confirmations, observations, and analysis going to the lower time frame to confirm this clearly. Okay, so know how much you will be losing and how much profit you're going to make. So from this point in time, as you can see, this is a very good amount of profit here. Market stood below here and it reversed at the very point. So let me explain to you guys, the V zone. Okay, as you can see, we have a level here, a level of 50 at the very point. So normally, once you see price about this level 90 here, you see a sell, remind you of a sell. Goes below this very point here, below level of 10 is a buy zone. Okay, buy entry. At this point, you buy when you see that price have bought below this point here, moving average, bought above, you enter into the market for a buy. Then this is V zone, what you can see is a signal for you to know that okay, this point in time, market is going to reverse for a buy. All right, now whenever price crosses below this level 50 here, it signifies a buy. If you can see, if you trace it from this point here to this point, trace it upward with me, guys. As you can see, from this point here, the market started to reverse for a buy. It reversed for a buy before it dropped again, and at this moment, it went below level 10. So once you already sold from this point here, let me mark it for you guys so that you can see. Once you already sold from this point, you sold here, and once you're in the market and price crosses below this V zone here, all right, now this V zone which you see at this very point in time, you already understand that okay, market is going to reverse for a buy. The market is going to retest for a buy, a short-term buy or a long-term buy. So at this point, you take your profit from this point in time. You can decide to wait until price basically get to the level of 10 and you exit and you place your buy, but it's not advisable. It's not advisable for you to go in at that point in time for you to place your buy. All right, it's not advisable for you to place your buy at that moment in time. Okay, so I hope you understand everything that I've shared to you guys on this strategy on crash 500 index. Okay, so basically what you do right here is to wait for the opportunity, that perfect opportunity. Once price cross above a level of 90 and the overbought signifies a sell zone. As you can see, sell. When you get to the V zone, this is the V zone where price will reverse. As you can see, creating a shape. This is a shape, a V shape. As you can see, the V zone. That's why I called it a V zone. So price gets to this point, immediately the market will start creating the V shape. As you can see, if you move it downwards, you can see it's like a V shape. From this point here, you can see V shape, as you can see. All right, then you buy when price get to the level of 10, the market will start to reverse upwards. Once price crosses below this V zone, market is still going to buy. There are other scenarios which you can see it happens. Okay, like this point now, go to this point here, the V zone here, the market started to buy again before it sold. All right, so this is a signal for you to see that this market is going to buy after you have sold. When price gets to that V zone, you exit, take your profit, you wait again for another opportunity. Trading is all about opportunities. You go in for that perfect opportunities. Mostly when you're trading on boom and crash market, you're only going for perfect entries alone. All right, so I hope you understand everything that I've said to you guys, everything that I've said to you guys in this video. And also, guys, join my Telegram community, the Daily Forex on Telegram. On my Telegram community, I share you guys tips and strategies. I give you guys, free signals on boom and crash indices, also Forex as well. So if you found value, do us a like and subscribe. See you guys on the next video.